Well, it's been another white-knuckle ride for investors this week, as even moderately OK news was seen as a trigger to sell. So with the latest from the markets, it's over to Steve Letts.
Well, Alan, the news from the US on the jobs front was bad. So, not surprisingly, investors continue to dump stock. And that's also a sentiment that's likely to spill over to our market when it opens tomorrow. The key indices all fell about 1%, with news of unexpectedly weak jobs growth. Unemployment also edged higher, as have the odds of the US economy sliding back into recession. With the artificial stimulus of the quantitative easing program due to expire at the end of the month, the Obama administration is clinging to the hope that the anemic jobs market is a temporary rather than chronic problem.
This month is obviously a disappointment, but it doesn't mean that we're going to continue on a downward trend.
Maybe so, but the downward trend on the market is disturbing. Wall Street has endured its fifth straight week in the red, a feat it didn't even achieve during the GFC and was last seen in 2004. While the pain was shared around the world, Australia felt it more acutely than others. With more on that, here's Tom Elliott.
Well, as you just heard, the Australian stock market had a fairly torrid week, with most of the damage being done on Thursday. Many traders getting very worried about defaults in Greece, the US economy going back into recession, plenty of bad news around. Well, let's turn to the retailers, and David Jones took the unprecedented step of starting its winter sale on the first day of winter. Normally you at least give people a chance to buy stuff at full price during the season before you mark it down at the end. DJ's shares were weaker, and the same experience was seen by Myer, JB Hi-Fi and Harvey Norman. Consumers are not putting their hands in their pockets. Andrew Forrest, one of the few stocks that went up during the week was Fortescue Metals, and we can only say that's because Andrew Forrest has been elevated from the already lofty position of CEO to that of chairman. Notwithstanding the fact that this is normally bad for corporate governance, the market seemed to like the idea that he would be staying with the company. Other resource stocks, however, weren't so lucky. Both BHP and Rio were sold down, again with the possibility that the US economy might slide back into recession. The bank sector, around about 1/4 of the Australian stock market, wasn't immune from the selling fever that gripped everybody. All the big bank stocks were down. In particular, National Australia Bank fell heavily. However, it did go ex-dividend during the week, a factor that is often overlooked by many people in the media. Tabcorp shareholders decided to vote for the demerger of their company, much as Foster's shareholders did just a few weeks ago. Many people now think that the casino arm of Tabcorp will become a takeover target for Crown Casino. Interestingly, Tabcorp shares were down during the week, whereas Crown shares were slightly up. And finally, well, I mentioned Foster's before, and a rumour swept the markets on Friday that Molson and Grupo Modelo, that's the Mexican brewer of Corona beer, might be running the numbers on Foster's. The shares were up, even though the company said it had no knowledge of any such transaction. Winner of the week is Ceramic Fuel Cells, up a whopping 23% after winning a contract to supply Australia's first smart grid in Newcastle. Loser of the week is Barclay Resources, down 20% after seeing a Spanish joint venture deal fall through.